Okay, so welcome back. Let's look at what the market has been up to for the period of time we have been away. So, this was Thursday market, and we saw all of these moves up until the end of Thursday. So, this impulse that formed here for all the sell entries that we talked about here, this was a real impulse for the exit. So this impulse had up to three, six candles and then exited here. So after the exit, now we had what we will call, in this case, not a consolidation because we are getting to the end of correction. So why the market has not got to the end of correction yet, we expect that we are going to see a distribution happen. And for there to be distribution, the market will have to, first of all, complete its move downward. So to complete this move, it will have to distribute. Okay, so that's what we are saying. It will have to create a distribution block, which we have not marked, and then go down. So for Friday, which is currently ongoing, this is already 2 p.m. in the market here, and this 2 p.m. for the whole of the day. Even why the market has moved in this way, has there been an entry opportunity thus far? Let's take a look and see where have we had entry opportunities. Remember, because we are trading a structure of correction, we are not so much in a hurry to take any entry. All right, we are not so much in a hurry to take any entry. Instead, we are only going to trade for our overall direction, which is a bearish direction. So, that having been said, let's look at where we got our bearish entry opportunities for Friday so far. All right, so you can easily see that where we had the first two bearish candles here gave us an entry opportunity here. So we had an entry opportunity on this bullish candle. Remember what we say about the entry candle at the beginning of impulse. So because an entry candle forms, it always does that interesting thing of going converse of the entry bias intended. So since the entry bias is supposed to be bearish, you can see that this was the main uh, bearish entry opportunity. So the price for entry is at 1.2220. So we can take an entry here because that was supposed to be the main entry and no bearish impulse has formed yet to alter that. So we can take an entry there because the price is currently there right now at 1.22, yeah, 1.22, yeah, 1.221. So the price is currently around that level of the entry. So let's switch and go take our entry. Then we can hold that. Okay. So we need to take this entry before the market goes away from there, but that's not a problem. We already have an entry pending. But if we do not take the entry and the market makes the move downwards, then we might just be out of the market. So you can see this is a pending order we placed here, 1.2227. 1.2227. We already have a pending order placed there, but this is the correct entry price. And you can see what has happened. The market has come back to that entry price and is now on a downward move. Then you can see the market has almost got to the final exit, which is 1.218. The market almost got there, 1.218 based on the total move so far, 1.21993. So the market was barely 100 pips away from the final end of our correction as we had anticipated. So we didn't have to take any entry anymore because we have a pending order there. Otherwise, just for you to know where we have had our next sell entry would have been at 1.2220. Okay, so let's go back to our analysis chart here. So if you had your entry taken at 1.22201, then this was the first time you took that entry, and this was the fourth candle. So if you are following our third and fourth candle entry rules, you notice we say that first take your entry on the third candle, and then if the third candle closes conversely, then take a second entry on the fourth candle. So and that was what happened there. So you're supposed to have two entries here. So one on the third candle and the second on the fourth candle. If that is explained, we can now say what happened then, where is the stop loss? So first of all, I haven't taken the first entry at the correct entry price, 1.2228. That was supposed to be giving us the stop loss at 1.2232. 1.2232. So the stop loss was triggered the first time. Okay, so which means that for the first time, the stop loss was triggered, and that means you wait for another opportunity for an entry. If that is understood, then where is the next entry point? So we now have the first attempt here to enter here, going to trigger the stop loss at 10 pips because we are using a 10 pip stop loss above the correct price for entry. So 10 pips above the slab. Okay, so the next entry will be in the new forming impulse. So you see again, this is two bearish candles, and here is the uh, third candle that's supposed to give us the impulse. So, but now because third candle signifies entry candle ordinarily, what happens here? You notice that your new entry price is 1.2215, 2215. Okay, but what happened? This is a third candle again, and the third candle goes to close conversely. Okay, conversely again, but in this case your stop loss has gone higher. The stop loss now is at 1.223, so 1.22437. That's the new stop loss based on what we saw here. So let's mark that so that you can easily follow what we are referring to as a stop loss. So stop loss is 10 pips above the high of the bearish candle that started the new impulse. So if the high is 1.2233, it means stop loss will be 1.2243. Okay, so that having been shown, now your entry here would be worth how many pips of stop loss? 1.221. That's over 30 pips of stop loss. So you may not want to take all of that risk. That is why when you have your third candle going against your entry bias, you enter on the fourth candle. So if you entered on the fourth candle, which means your second entry here is on the fourth candle, you have 1.2227 to the stop loss of 1.2243. So that's about 20 pips. Okay, so 20 pips would have been your stop loss, which obviously the market has not come to engage. So the market is currently within the entry zone for the third candle and for the fourth candle. So right now the price is staying above the entry price for your second attempt because the first attempt went to hit stop loss, and of course the stop loss for the first attempt is very close, but for the second attempt your entry is and that was 10 pips, by the way. So that was 10 pips stop loss. So what you gave back to the market there was 10 pips if you entered on the sell. Now for the next entry, the stop loss is still 1.223, 1.2243, because that's 10 pips above the high, since it's a bearish pattern we are following. So entry candle again shows that the market always does what we are projecting, almost always, that the entry candle will go against your entry bias. And that was what happened there. This was the third candle and this was the fourth candle. So in this case, you needed to have two entries, two entries with the same stop loss. Okay, so if you had two entries here, first entry is already in, that's a fourth candle entry is already in profit, but first, which is third candle entry, is not yet in profit. But both candles, both entries are well in a good position away from where loss is possible. Okay, so that would mean that your third entry price at 1.221, once the market breaks it again and goes down. Of course, after the fourth candle opened, the market made a good move downward. Okay, but remember that there is no exit yet because there has not been a new impulse formation, which is what is yet to happen. So, where will the impulse begin from? That will be something to watch out for. Whenever the next bearish impulse begins, you start watching out for exits on your entries here and here. So right now you have two entries that are currently active because the third entry was activated on market execution, and also the second entry was activated based on fourth candle entry principle, also on market execution. And that haven't given you two entries on a sell, you are waiting for your exits, either in loss if the market goes to hit your stop loss, or in profit if the market forms a new bearish impulse that gets terminated. You will only exit when the new bearish impulse gets terminated. And that takes us back to what happened here. You notice we saw when this impulse was forming, and we asked where should we enter again, and we followed our entry on third candle principle here. So, and we say you hold until the impulse is terminated. Now, notice when you follow the rule, how much profit that gave you. So, entering on the third candle here, holding on to impulse 1.2276, coming all the way down to 1.2221. That's about 20 pips. Sorry, that's about 50 pips profit, just because you knew where to exit the market. So it is important to follow these rules, and these rules are followed sacredly, yes, sacrosanctly, yes, in our fast trade fair. So this has been a good demonstration of one full week of trading in a direction that has been preempted. And that is what the arrow line is here showing. So this arrow line that is drawn from the beginning of the correction and is still continuing, it shows the direction of all the entries we are expecting. So one thing you must take note is drawing your arrow line, which is your directional line. It is not a trend line in this case. We're not trading with the trend line principle. So we are not looking at how the market reacts to that line. We are only using it as a projection of how we want the market to move, and why we will only look for entries that conform with our projection. So since our projection for the week was a downward correction, every entry we had looked for has been to sell, which is speculating that the price will go down. And you can see how it has played out. This was Monday, the price went down. Tuesday, the price went down. What again? Wednesday, here, the price also went down. Then Thursday, which was yesterday, you can see how far the price again went down. So we are still on that pattern. And now this is Friday. Friday, finally, the price is still going down. So by the end of today, the correction move will be over, so that we now anticipate a new trend to start by next week, Monday. So on our fast trade fair, this is exactly what we do. We have Monday to Friday to trade a particular direction of the market. Once we have done our studies and determine our directional bias, every entry we will take will be based on that bias. So this is a full demonstration of a week of trading a directional bias, and that will also be applied practically during the fast trade fair. This has been a demonstration of what you will experience in the fast trade fair. So we are about to go into the fast trade fair proper, and this has only been an induction to show you how we are going to be engaging over the counter in the financial market as retail traders. And this is exactly what we'll be doing to make value or get value from our time spent at the venue of our fast trade fair. On the whole, you will enjoy your experience. You notice our projection has been clean. We retained and maintained one projection, which was a downward projection. And you can see that even with how the market moved upward here after the fourth candle, which was our second entry candle, made a good rundown move, we still have not changed bias because we still have the arrow line giving us the overall direction we are expected to look for entries at. And this was taken based on the previous week's closing with a bullish impulse that got terminated. And we knew that that impulse will need to be recovered back. All the moves of the impulse will need to be recovered back for the market to balance itself. And that is why we are looking at only bearish entries. And you see how clean the market is moving in our bearish entry bias. So it is important to know where your direction for the week will be. And these are the things we'll use to take our trades during the fast trade fair. So we get started. Creating your account is very important to get your trading account set up and verified with the recommended broker who is serving as a wholesaler for all the financial assets to be traded. No need to come to the fast trade fair with your items or products for sale. You come with the capital equivalent of all the items you have in your stock for sale, and then the capital you've come with will be funded with the broker in your own margin account that has been verified, and that capital is what will be traded for the week. And then you are expected to make the same amount of profit you projected for your business for the month. Only difference is you'll be making it in only 5 days, and then you get your money out by Friday and get ready for your journey to return to your business on Saturday. That is a fast trade fair. It is an easy and interesting and also impactful experience you will be having, opening you up to all your potentials and all you stand to gain as a retail trader without jeopardizing your business gain in any way. No time lost. Every time spent at the fast trade fair is for productivity and results of excellence. So see you when you are registered for the fast trade fair and get your invitation to locate the venue for each month and take advantage of this and do this on a monthly basis, 5 days only in each month. See you at the fast trade fair for the coming month. Thank you.